Evening to you or wherever you are joining me at this hour. Welcome to 147 edition of Investdata Trading Academy live with Ambrose. I said yesterday that the market sentiment remained weak despite what we saw kind of rebound in the global market. This morning, telling us yes, that the market around the globe is still what is still struggling. Despite the rebound we saw the previous, as I said, the weak sentiment and the weak momentum has continued to kind of prevail in this matured market and even down here in our local market. As to speak now, the seeming rebound of the global market on the previous day on interval of on the intervention of Bank of England to save its financial system collapse was short-lived this morning as we speak now as the market are opening lower across the world, the globe, sliding down again due to what the weakness of what of pounds again after pounds have hit almost 72 years low, and that tells you that everywhere now around the globe, I will tell you that the fear of recession is kind of increasing because we have seen the impact of the hawkish monetary policy of the global of the central banks across the globe, and this is what the World Bank and everyone have been warning that yes, we need to think twice. The central bank to think twice in terms of or rethink in terms of this continue or aggressive rate hike that is also putting most of this economy in bad shape. Knowing that the government across the globe are highly indebted, when you are also increasing no rate, automatically you are also increasing cost for of serving those loans or those debt for the government. You can see what happened in England yesterday. When the Bank of England took a step to save its financial system from collapsing. Even this morning, as we speak, they also urgently trying to continue to buy into bonds and also just to stabilize the market and also avoid financial kind of disaster. That tells you that the impact of this hawkish monetary policy tightening we are seeing here is also telling you that it's not only in our domain here is globally and at the same time is heating up the economy. That is why the fear of recession is early, and that is why the central bank has continually warned that it should not the central banks of this world should not or central bank across the globe should not throw the global economy world into recession, and they should have everything. But gradually we are seeing the impact alone. Don't forget that the same intervention that is now trying to ease a quantitative easing now started coming again in form of intervention. Don't forget that Japan also do the same intervention recently. China have left their growth rate unchanged and others just to manage the economy. If you are following other climate policy without looking what you are bound to go the way of Bank of England. That means here in Nigeria today you can see that our exchange rate has also fallen further to around the 730 at the parallel market, at the black market. It tells you that these are the things that going to affect the economy, and that's why when we saw the recent rate hike back home here about almost 150 basis points, it was not envisaged by any analyst or economist, in this environment. Was thinking that maximum or to be what 100 basis points, 150 tells you that it's an extreme, and this is going to what kind of hit the economy, every aspect of the economy, both the government, government coming to even to source fund now will be at a high rate. You can see what happened at the at the treasury bill auction yesterday that all the tenor had what had an increase. They were because of what to factor in what the recent 15.5 percent of minimum of NPR. You can see this tells you that yes, even when the savings deposit also has increased from about to about 4.63%. All this is said, look at the environment we are creating. What is the earnings of the people? What is their purchasing power? For you to think of savings in a worker in Nigeria going to save, what's going to save? Those that are currently minimum, a salary of 30% in this environment where inflation is on the roof, hitting almost more than 17 years. If you go to statistics like I review to those in the in the Investdata question and answer, they see that for all this was since I'm telling you since democracy came to Nigeria, I'll tell you this: they guys were having an interest rate at 15, and also inflation at this magnitude of almost 20.52. It tells that you, as an investor, looking at what is happening in that physical market with the rate, even with the bond moving to 13 or 14%, you can see that it's still far below the inflation rate. That's why you need to balance your portfolio at this point for you to stay ahead of the market. Now, the consequent effect of monetary policy tightening across the globe is what we are seeing, and that Bank of England have shown, and that also be a lesson to other central banks and their economy. They need to work up a rethink so that at the end of the day, we'll see economic trying because that is the only way the market can beat out. You can see the market trying to oscillate on all these all these economic headwind that's coming left and right, and all that thing that's making market to go up and down. As I said, in this volatility, no matter what it is, there's still opportunity in it for you to understand how to use what a contemporary technical analysis to take advantage of this volatility even as inflation is rising and also we're seeing interest rates moving. But automatically, when you see inflation rate like down here rising and you see inflation rate, that will tell you that we're going to work to have a slow world national output, a slow industrial output, and that will lead to what recession. And if there's nothing, we might go back again to recession in Nigeria, but we believe that they should manage it between now and the next MPC meeting and know what to do. If not, I'll tell you, the more the cost of fund has increased, and also cost of even living has increased, and I'll tell you, those that are manufacturing, the private sector and the manufacturing sector, the national output are declining. What are you saying? We are pointing to already to recession because this 15 basic point is a hit. Yes, it might be some sector that benefit from it. I'll tell you, on the holistic approach or holistic look at the economy, this is not the right time to have such a rate hike at this magnitude. I think it's a good time for us to rethink, especially the CBN and its committee. The weak sentiment and the momentum has continued to prevail or persist on the global market, which also down here in the local market you can see what is happening. On that note, trading with stop loss become essential, and I also say that as a trader because volatility remain on high with high risk and opportunity for traders for traders that are also sharpening their trading skill as as they adopt new strategy to stay ahead of market by combining, as I said earlier, contemporary technical tools to catch trend easily on a strong momentum. When you enter trend at the early time and early hour with strong momentum, we are good to go with that. Also looking at what is happening around the globe, fear of Ukraine and and Russia continue, and as we speak, oil price continue to oscillate. As we speak now, oil prices continue its oscillation to rebound sharply from the recent pullbacks to that low of almost below $80. But now as we speak now, oil price have rebounded again sharply to around 88 89 point 82% $82 as we speak now in the international market, which is good for traders as we speak. But one thing is that I said it earlier that this oil price oscillation will continue to drive volatility in every market. You saw what happened in the crypto market. Even try to come up, still remain below $20,000. Other instruments, commodities also oscillating. These are the function of what is happening around the globe, and this economic headwind is going to continue. That's why between now and end of the year, I've said it here in this program that the oil price is likely to hit $100, even surpass it, and that says that I've said it earlier in this program that or in this class that oil price or oil sector or related companies are going to perform well, and this will reflect on their earnings, and that will support their price and also their payout at the end of the year. That means if you really want to know how to kind of do your or take position ahead of these earnings we're expecting from different sectors, that means we expect the sectorial rotation to continue between now and end of the year, even toward the first quarter of 2023. That means for you to take advantage of where to position ahead, even in this inflationary environment we are now, you need to also join us or join me at the fourth quarter masterclass that is coming up on Saturday, the 1st of October, with me and others market professionals and experts to help you know exactly where to stay and where to put your money. And this also as we're going to review tradable ideas, and also sharpen your trading skill for creating wealth and also building financial independence or freedom. I tell you that it is what the skill you have that determines how far you go. Yes, you can lose money today, but the skill you have can be able to recover that money. That's why I've said earlier that in the last 3 years, we have seen, or last 4 years, we have seen that the market volatility has changed, and you need to also adopt a new strategy, and that is what we're going to review in the coming master class. For those that are still paying, say kudos, fine. For those that are yet to pay, I need this opportunity to have between now and on Saturdays before 7 o'clock, also to make your payment and take advantage, because it is the skill you have. I mean, yeah, people are running scattered now where to go, but they have seen fixed income market, treasury be coming up, But that is not what to do. You need to what take your best job. Where should I put my tent now? I look at my portfolio, where I'm going to balance, which sector should I be, which individual stock should I be on the market, that I know that even the oscillation we're seeing price won't affect them much, and at the same time will help us also make money in the market. It's very, very important. As to speak now, US market and the Europe stocks are down in red, just as Asia and the Africa market are still missed as we speak. NTS has opened this morning lower and is still in the red as a result of what reaction to this recent hike in rate, and which is going to continue. And that's why we look at the volatility today, to see the outcome of how markets are reacted between the last MPC meeting that was held on Tuesday and today. What is the market doing in regard to that that action? Is the market still reacting on a strong group, or market is also taking time to take position and move to sectors where they think that they can also position ahead of inflation? Because as we speak, the factor that are going to drive the market between now and end of the year no are still there, but who believe that liquidity is a very key factor that will drive the market as we speak. Because even when the Q2 number came to the market, we saw with the good numbers we didn't see movement in the price. Now we're looking forward to see what the Q3 number, and the Q3 number will also determine what will happen at the end of the financial year. I've said in this program often and often that the Q3 number is as important as what as the full year, because with Q3 number you can start making your projection, that will forecasting what it will be and where it not will be. And I will say it again that as at Q2 we saw many companies surpassing their performance in Q 2021. If that trend is maintained in their Q3, what is likely to come out at the end of the day? What will be the payout policy? Looking at the high cost, are they going to pay more as high they have been paying? In this cost, inflation environment, and everything is looking up. Are they going to adjust now? These are the things that we want to also look at, and also know if the right stock to be at the right time, so that we also maximize what the low valuation we're seeing in exchange, because our P ratio have revealed that the market is cheap now, and that P ratio is that yes, we're having a high dividend yield and earnings yield of many companies. That should also guide us where to put our money as to speak. Like I said, there's no cause for alarm this market, but rather once we invest intelligently with information, you are about to see what ahead of the market. It depends on what your investment goal and your investment objective and how you are looking at the market. Panicking will not solve the problem, but rather taking more information. That is why you need to up your trading skill and your investment skill to always take decision with confidence and stay with your decision. But when other people's decision are put your own up and down, that means you are not following your own investment objective or your trading plan. If you are not following your trading plan, you are about to move up and down by another person's decision. But when you have your goal, you have your trading plan, you know your stop loss, you know your entry and exit strategy, you always stay in position. Because I'll say you at the coming master class, yes, all those tech analysis strategies that have failed, we're going to give you a new one that you want to use to start looking at what will work in this market. And that is what I've been doing for a long time. But at this class, I think this first class are going to bring all those strategies down on how to use that. This skill you are really there, the tech analysis you have been using before, how to use it better, so that you know what you are using, what you are doing before. You now know that this I'm doing what was wrong, or the way I was taught that was not the way I should use it. But another new way to use it now that we're seeing volatility on the rise. That is why I will encourage every one of us to make time and join us at the coming masterclass on Saturday. I will start exactly by 9 a.m. and the time will close by 4 p.m. And this is like a whole day. All the speakers are ready. You can see their materials coming in, so that at the end of the day, we also smile home with a good position to take, and also go and also position your portfolio for better return. At the same time, to edge against what is happening in the economy. Is for those that have good fund that also want to look in the world for the world of treasury bill. Because at the end of the day, if you are giving them 12% off for another 1 year, and you take your interest account now immediately, when you're at the end of 1 year, if this inflationary environment you are, and money comes and the value of your money have become something else, what will you be? It's better to be in a position where you can move with the trend of the inflation and stay ahead of inflation. Because as you are earning good dividend and capital appreciation, and you are above the trade, you'll see your fund will still be giving you good value, because what you are still multiplying. But when it comes, you are taking your upfront here, and it comes and that money cannot afford to buy something reasonable again, because of what the time value of money, and at the same time inflation have eaten up the value of the money. That is why you need to also rethink where you are jumping to as you are taking decision at this moment, because it's very, very key. Because every investment is against the future. Either you are doing bond, you are doing equity, every investment is future performance is not guarantee of what of past performance, not guarantee of future performance. That is why we're all looking ahead to see what you're going to show. We're all looking at these data and looking at what the expected returns and how we should guide what our investment decision is very, very important. Yes, before we go into looking at the chart, we want to look at the chart to discuss little things because we have seen that volatility in the market now because of post 27 rate hike. We want to see how volatility will also will help you and I to make some decision in this market, especially seeing that our markets at a critical what support level as we speak. We want to look at the chart, looking at the a day chart, weekly and monthly chart again. Now that we have seen the the outcome of MPC, how the market performed yesterday and this moment, and what other days that that the MPC took this last three MPC, what has the market done? What pattern do we see after the MPC meeting? Is it a good one or a pattern that tells us what to do at this point? Because this is another opportunity for us to take advantage of what the last quarter of the year seasonality and all we're expecting to come to play out in the last quarter, to take advantage of it. The earnings, the seasonality, and also what we expected the political activity to start, liquidity, and all. Let's see how it's going to play out in the next. That's why we need to look at that. So I want to check now to see when the first MPC meeting was held. For sorry, the first MPC adjustment of from that 11.5 to what I think that was on May 27. Want to look at that date and see, and also look at the what happened on the July 19 when they also do another another outcome of almost 100%, 100 basic point up, and the last one. How does the market perform in those two previous days, and what we are seeing today? Is it giving us a clue of where the market is going? Because this is how to invest before we look at the state of the market. I told you that the market is slightly what in red, but let's see what happened at the end of the day. But let's quickly look at our chart now to see what I'm saying now so that we can easily look at it together to conclude. Yes, I want to look at the daily chart. The daily chart before we go to the monthly chart and the weekly chart. This is already a daily chart, but I want to call out some okay, let me use a trend line. That will be better for us to make it easier. Let me take one trend line here. Make it easier. Let me see if I can use what I use to make some verification. This is a daily chart already on daily daily NGS index action. You can see here on the and also the date. This is not showing the date. It's not like okay. The date, okay, I will use the date down now to work on it. There's May 24 was around here when the around 24 was here when the market the index was the first MPC. Yes, correct, 24, correct where I put it. 24. This was the first one, the first adjustment. After that, you saw that market was down that day. The next day, you saw market rebounding, but you saw this was a resistant candle, but it maintained uptrend, but didn't sustain it up. It started coming down. Then that downtrend continue down, but I want to bring what we used to look at the strength of the trend. Let me call a stochastic oscillator up. Hold on, the chart is not responding. I needed to call us stochastic oscillator to help us want to look at the momentum behind the price because I tell you momentum is a leading indicator. You got to know the momentum that is pushing the price. What happened after that? The momentum is it a weak momentum or strong momentum? Is it a strong a weak trend or a strong trend? But why did it not respond? Okay, please let me quickly refresh this page here. Not responding. I want us to look at those period and now because we saw yesterday that the market was missed, that the few The few high cap stocks or blue chip companies sustained the market to close marginally green, but we know that the market breadth was really negative. About 20 stocks were in red, while just 7 was up. But because the high price stock were among the the ones there up there, we saw, that market finally closed in green after oscillating for throughout the session, and that tells you that, we want to see what pattern are we seeing from here. That's why we're coming back. uh, okay, good. You can see it's not that I want to call your oscillator up now. It's very, very important for us to know strength. Yeah, strength oscillator, and call up all my indicators now, so that when we finish from here, we can go to the state of the market. I've mentioned about we want us to do something first. Yes, 22, 8, 1. Then we're left with money flow. Flow, flow. Good one, good one, good one. Yes, I think you can see very well here. And on the 24th of May, let me quickly come here again. You can see it here, 24th of May. That was when when the first adjustment was announced from that 11.5 to 13, 150 basis points. So what happened that day? Yes, after the adjustment here, the market came down, but you can see that the blue line the next day saw a position taken here, despite that the money flow was still going down. This also will tell you that this uptrend out here was weak. Money flow was going down and it moved, but it didn't go far here. It didn't even touch 50, the midpoint here, before coming down. That's why the trend that you said that you always know that you should not enter a trend that will not last. That's why most people go into the wrong trend at the wrong time, and that's why we're going to do time and price analysis in the master class. So you enter the stock at the wrong time instead of buying it at the wrong time. Momentum tell you, because momentum will go before price. It is the momentum that move price. But if you see price going ahead of momentum, know that price won't be sustainable. That trend won't be sustainable. It is when momentum is moving and price is following. That is why you need to also know that this is a real move. You can see what happened here. That at this point, when there was a change, momentum is moving up and price was going up. You can see here a jump here. You can see this is a really strong momentum that is here. People say it's oversold. At this point, you can say this here is not oversold region, but rather it's a strong momentum that sustained this uptrend even as it was going, because there was still strong momentum here. That is very main. If you say oversold region and you try to come out here, you miss out all this rally. But you can see that it remained not strong here because what the momentum is strong, and that also reflected on what on the money flow. No position started looking up and it becomes stronger, and all this while before what it is sign that when it touch also the signal line. And don't forget what I also discussed in this class, that whenever you see that the price action or index action is above the trend line and it remains above the line, it tells you that's also a strong momentum. If you want to take profit, little by little, fine. You want to stay long in that position, it is this will help you, because when there's strong momentum, also you see volume there, you see everything kind of align with what we're going to discuss in the common master class. Once you see all things are aligned, it tells you that things are what are set what for you. But when you see weakness, also that momentum is becoming weak, because weak trend, when weak momentum is there and you are seeing price going up, it tells that price will not go far. But when you see strong momentum leading, but when you see price leading weak trend, it tells that will not last. For that, you need to understand how to use your technical analysis very well. That's why these are what we're going to discuss, so that you know exactly when to be in the market, when to be in stock, when to catch the top and low, and before a different interpretation of how to use this chart. I know they taught us in different class, in different level, different online people discuss, different board. The real one that give you money is what we're going to discuss in this common class, because it's going to change your portfolio and also our portfolio. That's why I said skill is very, very important knowledge also is power, they say. And because if you acquire knowledge and skill, I'll tell you, you can always be there. But when you have money without skill, it won't happen. When you have skill, even when you're losing money, your skill will help you to come back, to push. That's why you must not miss the master class so that you can catch how to use all these in the indicators and other technical analysis tools to take what wise investment decision. And this as at what as at on the 24th of May. You see, it didn't last. You can see what happened. It came down, and that is where the journey started. That the market continued what on a downtrend. You can see it here, and because of what? Because of this rate hike again. Don't forget that. No, I told you that in any economy, the factors that drive the economic cycle are what? Interest rate, inflation, and what? National output or industrial output. Once you are seeing high interest rate, inflation is on the rise, you are starting to see what? A weak national output or industrial output or non-manufacturer output because of what? Because of high cost and inflation that also hit the pulse of the people that will consume that goods, and also the cost of producing them also will shrink everything. At the end of the day, you will see what? A less productivity that also lead to what? Contraction, in economic cycle. Why? Like general economy, when you see your GDP, in red for 2 times, for 2 quarters, automatically, you are entering what? Another, recession. I believe that, for what we are doing, now, this last quarter of the year, the third quarter of the year, let's see what it look like. But I believe that because it's coming almost at the end of September, we might not see much on the GDP for them. Might see also a little kind of a slight growth again that is still fragile. That anything that happen in Q4, if the regulators or the MPC people not rethink on their decision. But that is not that. Let's continue. Here is on the what on the 24th, and also on the 16th, on the 19th of June, on the 19th of June, 19th of June, July, sorry, 19th of July, where 19th of July, yeah, this is another day. You can see this another day. The market was the index was slightly above the T line. You can see it here, but no, it was green the previous day. But that day, after that, they can see that the trend also started what remain flat, but your oscillators are indicate that weakness already. I can see it going down, and that it crossed down the T line. It continued, it remain on the T line for a long time, and the market that was late when all market has not broken down all the T line for this one until a time again the market came to this level, at this level, and you see a new momentum. For this moment, you can see that why it didn't last, that the momentum is looking up at this point. You can see an up momentum here, see up momentum here. I can see that this was also like a flat, momentum here is is looking, momentum is looking up here. White price is looking down here. You can see it here, and that's why for see the trend that coming down again, and that is what we saw here. And market remained what under the T line for a long time. Now I've just seen the outcome of what for the MPC again on the 27th. On the 27th, after that, you can see that the trend has been on a flat trend, and you can see automatically that was in weakness here on the oscillator coming down, and also you can see that this oscillator move, but there's no strength in this move, and that's why you see what money flow coming down. Even when the market was slightly green, I see that money flow actually coming down. It's also confirming weakness in the market. That means you need to take advantage of what you're going to see between now and the first week of October to position in good stock ahead of number. That is where we'll see that these are the factors that will change the trend. But you keep your eyes on trend. That's why I say for now to do time and price analysis with price action with a good understanding of money flow. I will tell you, you will be in the right stock at the right time. You will chase trend. You know when the trend has gone beyond your level, you leave it alone, because most people, when they are chasing trend to the trend, even when to low, they jump at the wrong time because the trend is going up. When they don't jump, see the trend coming down, you will complain that it's a signal that you saw. That signal what the interpretation, I also you miss it. That is why you are entering at the wrong time and the market turn against you. But in this master class, we're going to make things easier and simpler so that you understand how to use this contemporary technical analysis tools and use for to make informed investment decisions that at the end of the day it will help you to take a good investment decision. Yes, actually I believe you have seen something here, and this was a daily chart for quickly chart first quickly because of time. Also, if you look at weekly chart, if you take the same, you can see that the market, even when market here, you can see that market also down. You can see sign of weakness here. Even when it remain up, starting, you can see that the market was weak. And this is what you want to know. You must know when momentum is weak and when momentum is strong, and also when it's a weak trend and also a strong trend. Once you're able to combine them, you know exactly what to do. As at May 29, you can also equally see here. Let's come back here. May 2020, May 24. Yeah, Casino 24 here. The market can see that's also below what? Below the T line already. Can see sign of weakness. Here it remained. Even when it tried to go up of that, which also we saw in the daily chart, then last that's that it came down. It's a sign of weakness, and that also remained at this level. Even when it tried to come up here, this can see this also divergent here. Price is coming, price is coming down. Trying to see an uptrend. You can see what happened. Price is coming down much, but it didn't match. It remained on that was surprising trend of oscillating level before we saw little pull up here. You can see that the trend telling you that you must understand the momentum behind the trend before you can take action, and this is what the chart is telling us. On the weekly chart, you can see also equally see that the market is also below the T line, and also we are seeing that a weak momentum already. That means you need to wait to confirm a strong momentum that will go, that push price up, trend up before you can also dump. This is what the market is saying generally, not individual stock as we speak now. These are the things we need to have at the back of our mind, that we must understand how to interpret this chart and know how to use it effectively. Even as we speak now, you can see a good trend here. The market is above the T line, but already the confirmed is a weak momentum. That means we must see a reversal as momentum is coming here to confirm another position taking, and that's what we're looking at in the last quarter of the year. On the new month of October, any season month, you might see a turnaround. That will depend on the liquidity that will come, and that also will tell you the direction of the market as to speak at that time. For that, we need to also know how to position ahead of those expectations that will be in the market at the right time. Yes, as I've said earlier, that market is it's also slightly what in red. Market is doing 49,158.69, down 13.01. Market is in red, 0.02% percent down. If you look at the gainers now, the gainers is lower than the loser. That means we're having a negative market breadth as we speak. We're having about six gainers and about 11 losers as we speak now. We're seeing that Africa Prudential is leading that pack, followed by Owando. You can see FBN holding also RT Briscoe and UBA. They are the top losers as we speak now. But if you look at the other side, you can see that the gainers were seeing Stanbic IBTC leading, followed by you can see Access Corp and followed. You can see also Jaiz Bank, you can see Sterling Bank. You can see that the banking stock are trying to also have kind of a breakout yesterday. The banking stock was done as review by the index yesterday, down by 1.01. For this hour, you can see that banking stock are also featuring at the gainers chart as we speak, followed by Ikeja Hotel. But if you look at the volume chart, you can also see the banks they're also dominating. We saw that the Jaiz Bank is leading. We're seeing volume showing consistently in Jaiz Bank, and that is also a sign for the traders to know that there's something about to happen in Jaiz Bank. You can see the Veterans Capital Insurance, you can see also Stanbic IBTC, GT Code, and the Fidelity Bank. These are the let's quickly pause our time. The time is fast spent. Now let's quickly look at what is happening in the Stanbic banding, what is happening in Jaiz Bank. Is this sustained trend? And also we look at the pullback was seen in the FBN holding. UPA that have just released the markdown. What is happening? Let's see what time formula. Let's look at, first of all, look at what is happening. We'll go back to our daily chart because this is a day market. We are looking at our daily chart now. Yes, let's look at what's happening in Jaiz Bank. We're seeing a volume in Jaiz Bank of late. Let's see what is happening there in Jaiz Bank. Let's see. Jaiz Bank on a day chart, I will tell you this is a good one. We're seeing a good move here. And that's why I say look at the chart so that those in Jaiz Bank, you need to also hold your position. We're seeing Jaiz Bank trading above the T line on a daily chart, good one. We're seeing volume at the same time, strong momentum. That's why I say momentum has to go ahead of what? Ahead of price. You can see it here. As momentum is also moving up, we're also already seeing price in that direction. Saw it yesterday, trying to resist decline. That trend was sustained. And money flow is almost reading high at almost 81, which is good for me for the stock. Let's quickly look at the 1 hour chart for Jaiz Bank to see what it. Jaiz Bank on 1 hour chart is strong. For me, it's a good one. It's a sign of strength there. Even as a slowdown, but it has continued also with a good strength. They tell that the strength in Jaiz Bank is still strong. And now that it has crossed the T line, it's a position to watch. If you are that position, if you want to take position again, you can equally look at it and see what the number also will support how far it will go. Let's quickly look at Stanbic IBTC that have stayed stable at 28, 29 all this one, but now we're seeing a spike in it. Now let's see what is there in Stanbic IBTC. On the 1 hour chart, we are seeing that the stock is still weak. The momentum is still weak, and price is just looking up, want to know, but slightly above the T line. But we are seeing the momentum is still down. That means this price want to wait to confirm. And money flow is flat, not looking up for 1 hour chart. Let's quickly look at the day chart for Stanbic to confirm the state. Stanbic, yes, we are seeing already. Stanbic for today, we are seeing that yes, flat on the T line, but it's not. We are seeing a kind of off sale. People are exiting, trying to sell down, but the momentum is still strong. Also giving us sign here, but let's wait and see. Our money flow are confirmed that this is a weak trend. We are going to know. And which momentum has already given us sign that yes, it's not going with the momentum already. The leading momentum here are giving us signal of what of coming down, and that is also what we should also look at. Say that all is not well with the stock. Yes, that's why leading now is not strong. That's why I say you must know exactly a strong momentum for you to go enter any trend. If not, if you are doing trend alone, and that's why what most people do in tech analysis. Trend is your friend. We agree, but it's how you enter trend, you enter trade. But if you able to point a trend early and with a strong momentum, that is where you make money. And these are what I'm going to discuss and how to use all these even your chart. What can also work on your chart to help you look at that for you to confirm yes by using the right time indicator to know exactly where to buy and when to sell. That will go a long way to help you in the market. Let's pick one quarter at a time. Let's look at what is happening in UBA. You say we're looking at the banks. Let's look at what is happening in UBA and FBN holding before we call it day because of our time. Let's look at these stocks. Access Bank start to come up. Let's look at the UBA. UBA on a day chart can see the price, the money flow have given us sign, and also T line. I think T line is very very strong for you to always use to work for your to know the state of the stock you are. That's why I said it's easier way to know, but T line is very strong indicator that I use to always guide me. Can see all this why UBA is the mark that has been below the T line and put the momentum also have confirmed money flow there that there's no volume in that stock and that volume was why it's coming down. When you see a new volume, like the buy position, but now momentum that this is a weak momentum and that one to see a reversal momentum that is where you can look the growth of UBA. But for those that are thinking long, yes, but for we traders, we must see a reversal before you can trade this stock. For those that are thinking long, fine, but for we traders, you have to also be very careful in this kind of stuff. Quick one, let's look at the FBN head, and I might look at that also. Access Corp, let's look at it. Yes, it's very, very important. Have a look at that. Finally, we look at the FBN holding before we call it again. You can see that the banking stocks are really on a day chart. If you look at what is happening in Access Corp, I'll tell you it's also a weak momentum already has shown us. Money flow has confirmed it. Yes, we are trying to rebound, but that there's no strong rebound that you have to also watch to confirm an uptrend, a reversal, and a breakout for as we speak is below the T line. But one thing I told you earlier that when the price is far below the T line, you can see now the T line here, the price is also a sign that it might likely move up. But when it confirms, but I'll tell you, momentum is also leading that the trend is weak. But I'm not seeing a strong momentum supporting this one. For me, you have to wait to confirm for assets to buy. For ABN age, the last for today, look at ABN age, what is happening there. ABN age, yes, you can see on a day chart, there's also a sign, but we need to confirm on this time before we can. There's a good sign I'm seeing here, momentum that will give us sign. But we need to go, but money flow is coming down, and they try to resist decline here, even when it comes up. See where it is, it's a good one. But let me quickly look at the 1 hour chart for this FBNH. FBNH still yes. On the 1 hour chart, try to build momentum, but we need to confirm it. It's still very weak at this point, but trying to build a strong momentum. Give a signal of strong momentum coming to that stock now, or to see how far you go. And I tell you that most of this company, because we are looking forward to see their fundamentals, their financials, I believe that it must have a way of impacting on them, especially as we expect liquidity to come from the smart money. I've seen value that most of the stock are highly undervalued, and that also give them a higher upside potential for return. They might also start coming back to this market. That will change the face of the market. But to speak, what we saw, in the last two PCBT market reaction was a down thing. But we have seen also yesterday market is also on a negative move. But let's see how far it will go today. And the before market close will now conclude and see our how to take decision tomorrow and also out from Monday. Yes, I will say thank you for your time. Like I said, today will be the last class for this week. For tomorrow, I'll be preparing for the master class for Saturday, and look forward to see you. Like I always say, I encourage you go to the to another videos, about two videos already also in the on the channel. I encourage you, go there, subscribe, at the same time make comment that will guide all your comment also guide us. Feel free to make comment and give us direction from what you are saying, suggestion, anything. Just feel free there. Like so, I encourage you go to the YouTube and also go to our site for update, market update. All there are already on the site. I see you on Monday again. Oh, Monday is public holiday. Hopefully, that means we will resume our live class again on Tuesday. Thank you, and enjoy the rest of your trading day today. Bye.